And then if we come back to the price issue, well, the price is measured in a frame of reference. So if you're measuring Bitcoin in pesos and the peso, loses, 99% of its value, the price in pesos is going through the roof. And the price in Zimbabwe dollars is going through the roof. And so as we print more dollars, and by the way, I'm looking at my chart right now. I've got a 1-year chart of currencies. And against the dollar is strengthened against the Turkish lira 90% in 12 months. And you would go, okay, well, I knew that. But did you know it strengthened against the Japanese yen 24%? And Japan is supposed to be a pretty stable company, but 24%. And it strengthened against the pound 14%, and against the euro nearly 14%, and against the Australian dollar 9%. So what you have is all of the quasi strong currencies weakening against the dollar, some currencies collapsing against the dollar. And I got this other chart which actually shows the change in asset prices against the dollar. And what you notice is that oil and wheat, right? The stuff you use to heat your home, move your car, and avoid starving to death. If you don't want to starve or freeze to death, those things are 35% more expensive, 40% more expensive in dollars. So if your food and energy are going up in dollars, and if dollars are getting more expensive in your local currencies, by the time you add that, you realize you've got serious, painful inflation. And that inflation, that drives adoption, that drives the price up. And of course, that creates the instigation. You could almost say the first order driver of price is inflation. If the currency gets cut in half, the price doubles in Bitcoin. The second order driver of price is adoption, because people get afraid of inflation, and so they start looking for a store of value. And the third order driver of price is technology, because once everybody gets excited about Bitcoin and gets excited about protecting themselves against inflation, the demand for mobile phone companies or for Google or Apple or Cash App or PayPal to build better technology into their applications leaps. And so I talk to a lot of companies, banks, fintech companies that are offering Bitcoin to their customers because there's demand for it. And the demand is created by macroeconomics. So I think that if you want to figure out what's the price doing, you say, well, every 4 years there's a halving. Every 4 years, a lot more people know what it is. And every 4 years, the technology gets better, the currencies get weaker, the need for adoption grows. And then the last dynamic worth putting your finger on here is regulatory clarity. The regulators are getting educated. So we have all sorts of antiquated regulations that are from the 20th century, like wash trading rules are applied to stocks, but not to Bitcoin. And so that means Bitcoin's more volatile because you can buy it and sell it in the same day and do tax loss harvesting, but you can't do that with Apple stock. So that's an antiquated rule. They should either get rid of wash trading rules for stocks and everything, or they should apply it to everything. But having an asymmetric rule is negative for the new thing versus the existing thing. And then FASB accounting is the same way. If I have $1 billion worth of Apple stock at the end of the quarter, I show it as $1 billion. But if I have $1 billion of Bitcoin at the end of the quarter, I might show it as $200 million. Okay, so the rules haven't caught up. So accounting is negative for Bitcoin versus equity, and tax rules are negative. And then there's it's not clear what's the process by which you can establish yourself as a digital commodity versus a digital security. That's not clear. And then how do I prove that my stable coin is safe, right? What's the difference between Circle and Tether and UST? And is there one that's endorsed, by the banking regulator so that a big corporation can hold $1 billion? Like right now, Apple, Amazon, and Microsoft would not buy billions of dollars of stable coin and use it for global remittance because they are afraid it wouldn't be blessed by their bank. So if regulators endorse a stable coin, they give you a way to build a digital currency like a dollar. That's good for the ecosystem. If they fix the wash trading rules, the tax rules, it's good for the ecosystem. If they give you a way that you could take your project to the CFTC or the SEC and get it endorsed as a digital commodity and not a security, that's good for the ecosystem, right? And if FASB gives you fair value accounting that's similar to other assets, it's good for the ecosystem. So each of these things will accelerate adoption. They will reduce anxiety. They will drive the price up over time. Those are the fundamentals to keep your eye on.
Okay, so putting it together, we are basically in one big adoption cycle. And I do agree, what people have to understand is it's not only the supply side of you, right? Of course, the additional supply is going to be cut in half, but all of this is partially priced in already as it's hard coded in the Bitcoin blockchain or in the code. What people have to understand is Bitcoin is for the first time in history the only absolutely hard asset. And as you just said, demand is continuously increasing. If the supply is absolutely fixed, then there's only one thing which can regulate this and which can make Bitcoin available for everyone, and that is the price. Supply fixed, demand going up. So what has to happen? The price has to go up after time as demand is increasing if the supply is fixed. And I think this is a beautiful insight, and seeing it as one big adoption cycle is maybe a little bit more healthy and keeps people away from trying to sell the top and buy the bottom. And I actually agree. I wanted to talk about something else. 6 months ago or 7 months ago, we had a call, and that was just a few months after I think MicroStrategy had like a big event educating institutions about how to acquire Bitcoin, how to put it in the balance sheet, and so on. I wanted to recap a little bit. I know, of course, a lot of institutions are already in. What is your viewpoint? Did a lot of institutions actually follow up on their gained knowledge, how to acquire Bitcoin, how to account for it, and so on? And do you see that there's still a lot of potential and that maybe some of them didn't pull the trigger yet?
I think the catalyst for institutional adoptions are, there's a short list of them. One of them is FASB accounting. There's this project to review accounting for digital assets on a balance sheet. And that's been formalized. And I think we expect something next year, in the year 2023. It could be early next year if we're fortunate. But a lot of CFOs and a lot of CEOs are watching that. That has an impact on the way you report your P&L and your balance sheet. I think another interesting milestone is the availability of a spot ETF. And a big milestone that we should keep our eyes on is what happens with regard to the Grayscale, the GBTC application to become a spot ETF. Because there's a deadline coming up in July, in early July. I don't have the exact date, July 10th, July something. And right now there's a process going on, and the SEC has allowed individual investors to weigh in on this. And something like 11,500 letters have been submitted to the SEC, 99% positive, maybe 99 more than 99% positive. Overwhelmingly positive in favor of a spot ETF. I think that if the SEC grants that will be the first spot ETF in the history of the industry, which is important for a couple reasons. A, it's enormously legitimizing for Bitcoin. B, there are a lot of people that they want to hold the security in the form of an ETP. It would be. But they want to spot one. They don't want to own the futures, and they won't get in unless it's a spot ETP they trust. The third is that accounting catch is a problem for commodity or for the property accounting, But if you were holding the security, you would have fair market accounting. So a company that wanted to own $1 billion of Bitcoin in market to market and fair value, they could do it through a spot ETP, but right now there is no spot ETP. So I think that that will help with institutional adoption. I think that the third thing is we're waiting on some joint guidance from CFTC and SEC regarding digital assets. I think institutions are very sensitive to that. I think the fourth thing is we're starting to see more banks get involved in custody. I think by the end of the year, we'll see some large banks that allow you to custody your digital assets like Bitcoin with them. And I think big institutions, they're very slow moving on their accounting and on their relationships. Like a company might keep the same bank for 30 years, like very slow moving.